Us for our first quarter 2023 earnings call, as we have a lot of important information to share with you this morning. We'll be providing updates on the Advanced Clean Transportation Expo in Anaheim, California, that we participated in last week, news of the issuance of the final Advanced Clean Fleet Rule, known as ACF, by CARB 2 weeks ago, and some strategic shifts that we are making in our HYPERTRUCKERX commercialization plans in order to best maintain our strong cash position. I'd first like to start off with an update on our HYPERTRUCKERX powertrain development and commercialization work. For those of you who are new to the story, the HYPERTRUCKERX system is a fully electric powertrain for Class 8 semi-trucks that includes a natural gas fuel range extender to recharge the batteries as needed. When fueled with renewable natural gas, the HYPERTRUCKERX powertrain offers commercial vehicle owners a net carbon negative capable alternative to battery-only trucks, which have limited range and rely on expensive recharging systems that are not yet widely available. I'm pleased to report once again that we remain on schedule with plans to begin commercialization in the second half of this year. There are no new milestones to check off for the first quarter, but the product validation phase remains on track as we will begin extended fleet trials later in the second quarter. We are happy to inform that we submitted the required material to CARB in order to obtain our dual executive order with Cummins to certify the powertrain. We expect to complete certification from CARB, the EPA, and the National Highway Safety Administration sometime in the third quarter. We have previously shared that we'd start production of the HYPERTRUCKERX system in late 2023. But with the progress just mentioned, we now plan to begin production assembly of trucks equipped with the HYPERTRUCKERX powertrain in the third quarter, ahead of schedule. We've made some other great strides to assist with pulling in the start of production timing. The team has been working diligently on building out our next batch of C-sample trucks, which we expect will be the final version of the powertrain design prior to starting production. These trucks are going through continued validation testing, and they will be deployed in extended fleet trials starting this quarter. We have also recently obtained ISO 14001, which is an environmental certification, as well as ISO 9001, which is a quality process certification. These ISO standards are expected of and common across the conventional suppliers and OEMs in the space, but are often not obtained by early-stage companies or new market entrants like Hyliion. This achievement continues to build confidence and operational excellence as we move into production. Next, I'd like to provide an update on our HYPERTRUCKERX system commercialization plans and some strategic shifts we are undertaking that I mentioned earlier. As I'm sure everyone on this call is well aware, the past quarter has been an exceptionally challenging time for electrification and technology companies in the public markets. Unfortunately, Hyliion stock has similarly seen a recent decline, and it's prompted us to relook at what is the best strategic path forward for the company. One very clear advantage that Hyliion has is our balance sheet with nearly $400 million in cash. What is also clear is that the ability to raise additional capital in the stock market has become severely limited without incurring excessive dilution for existing shareholders. Consequently, we need to make sure that we utilize the cash we have in a focused manner and as wisely as possible. During our last earnings call in March, we shared that we expected to incur gross margin losses on the sale of the initial trucks that are part of our inaugural Founders Program due to startup inefficiencies that we expect to encounter as we go through assembly and delivery of the first powertrain systems. We also shared that we expect to see an increased use of cash this year compared to 2022 as we purchase production powertrain components for the Founders trucks and for additional trucks that we plan to begin building in the first half of 2024 following Founders deliveries. In total, full-year operating expenses, capital spending, gross losses on sales of powertrain systems, and working capital increases were expected to consume up to $200 million in cash in 2023, or said differently, about half of our current capital position. If we look back in time, electrification startup companies were encouraged and rewarded by investors for rapidly growing market share and revenue. However, today, the market is rewarding a quicker path to profitability and conservation of cash driven by greater investor skepticism for unprofitable business models. In light of recent capital markets developments and experiences of peer companies, we are taking steps now to better align with today's market expectations. We will continue to scale and grow the company, but we will do so with a keen eye for opportunities to reduce the rate of cash burn. The first area we are going to address is the losses we were anticipating on initial Founders deliveries, which are still subject to finalization and definitive terms. Our initial plan was to ship all 210 Founders trucks by the end of Q1 of 2024. However, as we assess the costs we'd incur by executing this plan, we believe there are more capital-efficient ways to achieve similar customer demand in the long term while consuming less cash in the short term. As we've begun procuring the powertrain and truck components, the costs have come in higher than we initially anticipated due to suppliers passing through their surcharges onto us. Thus, we need to pass these price increases along to our customers as well. We are working with the Founders fleets on restructuring initial truck orders as well as simplifying the agreements. We will see changes to the fleets participating in the program as we go through this process. However, we are confident that we can pull forward other fleets as replacements if needed. One other objective is to place the initial units with a greater number of customers, as this will allow more fleets to test and validate our powertrain and give them the confidence to place more orders in the near future. We are also planning to scale the ramp-up of production volume at a slower pace than we initially expressed. This will allow more time to procure components, which will reduce surcharges we are now experiencing, and it will give the engineering team an opportunity to implement some cost-saving measures in the system design. Our new goal is to begin installing production powertrain systems into trucks in the third quarter and to complete and sell 30 trucks before the end of the year. We will then continue to evaluate our future truck assembly and delivery plan for 2024 based on modified and simplified Founders agreements. We are also pulling back on our facility renovation that we were planning in connection with a fast buildup of our Founders program trucks. We also anticipate adjusting our rate of hiring and shifting more quickly to being a powertrain provider to the OEMs as opposed to tying up working capital, assembling and selling complete trucks. All of these actions will conserve cash while allowing us to continue our path to commercialization and profitability. Shifting now to an exciting update from the ACT Expo this past week. ACT is the largest trade show that focuses on new emission-reducing technology for the transportation space. In addition to showcasing our HYPERTRUCKERX powertrain with over 100 ride-and-drive events, we also unveiled the Hypertruck KARNO solution. We were very pleased with the level of interest and excitement we received from OEMs, partners, and fleet customers. With respect to the KARNO solution, it was the first time we publicly showcased the generator and provided an in-depth opportunity to show how the technology works. In our booth, we had a 200 kilowatt size generator mounted onto a truck equipped with our Hypertruck electric powertrain system. I'd like to share with you some of the highlights that we discussed about KARNO. First, it is a fuel-agnostic generator that is expected to be able to operate on over 20 different fuels. The vehicle we had in the booth is equipped to run on both hydrogen and natural gas. The generator brings forward significant efficiency improvements while also reducing emissions and will emit no carbon dioxide when fueled by hydrogen. It is also expected to have almost no routine maintenance as there is only a single moving part per shaft and no oil or other lubricants in the system. Lastly, the generator operates at about 65 decibels, which is quieter than an average conversation between two people. During our press conference at the show, we also highlighted how we will expand our business focus to also offer the KARNO generator solution for stationary power applications. With its high efficiency, low emissions, low noise, and minimal maintenance requirements, we see this as a strong solution for powering EV chargers, buildings, hotels, data centers, and many other applications that could benefit from a scalable microgrid. We expect to be able to produce electricity at a cost of around 7 cents per kilowatt hour, which is far lower than the cost of grid electricity in the US, which ranges from 11 cents to 22 cents. We also expect to host ride and drive events with our Hypertruck KARNO system later this year and begin to establish stationary charging demonstrations in 2024. Shifting to an update on our Hypertruck fuel cell demonstration truck. The development is well underway in partnership with Hyliion, and I am pleased to share that we are still on track to having the first vehicle complete by end of year. At the ACT Expo, Hyliion unveiled their new 200 kilowatt fuel cell, which is the solution that we are integrating into this demo vehicle. I have just one further update to share, which is around CARB vehicle credits. We previously showcased that vehicles with our HYPERTRUCKERX system will qualify for 75% of the ZEV credits that OEMs need under the ACT ruling starting in 2024. About 2 weeks ago, CARB passed their latest clean truck rule called Advanced Clean Fleet, or ACF, which is a direct mandate on fleets to begin adopting trucks with electrified powertrains. I am very pleased to share that vehicles with our HYPERTRUCKERX system will qualify for 100% of the ZEV credits under this ruling, the same as a pure battery electric or fuel cell truck. Passage of ACF will likely produce strong tailwinds for us as fleets look to comply with this new mandate. I will now turn the call over to John so that he can share more on our financial and strategic update.
Thank you, Thomas, and good morning, everyone. Turning to our financial results for the first quarter, we reported revenue of $310,000 from hybrid sales, including a full truck equipped with the hybrid system, compared to $340,000 of revenue in the first quarter of a year ago. Operating expenses totaled $31.9 million for the quarter, up from $25.6 million in the first quarter last year. The increase in spending is due to growth in both R&D and SG&A expenses over last year. In total, Hyliion reported a net loss of $28.8 million for the first quarter, which is up modestly from the $27.1 million loss the company reported a year ago, as lower cost of sales and higher interest income this year offset higher operating expenses. Looking sequentially, first quarter operating expenses and net loss compared to the fourth quarter of 2022 were up only slightly, $300,000 and $600,000 respectively, as spending is beginning to level off as we approach the start of HYPERTRUCKERX system commercialization. We ended the quarter with total cash, short-term, and long-term investments of $385 million, compared to $422 million at the end of 2022. We spent $37 million in the quarter, compared to $30 million in the first quarter of 2022, and $33 million in the last quarter of 2022. As Thomas mentioned, we are taking actions that will help reduce cash burn and expect that these actions will significantly reduce operating expenses, capital spending, and working capital growth. Previously, we guided to total operating expenses in 2023 of $130 to $140 million and cash consumption of less than $200 million. We now expect operating expenses to come in on the low end of that range. While we expect expenses to be reduced from the actions that Thomas noted, some of the savings will be offset by the ongoing expensing of production truck components that have been or will be received until we have completed all HYPERTRUCKERX research and development work. To add some additional clarity on this point, all truck components that we acquire prior to the start of powertrain commercialization are expensed to R&D, even if those components will be used in production powertrains that are later sold. We've already started to receive some production components and will receive more in the coming months. We now expect to complete R&D work later this quarter or early in the third quarter. The implication is that operating expenses this year will be somewhat elevated due to receiving and expensing some production components ahead of the start of commercialization. Note also that these higher expenses will be completely offset by lower cost of goods sold as we sell trucks later this year and into 2024. We don't know the exact impact on operating expenses from this expensing of production components, and it could be higher than we're currently forecasting. We'll provide further guidance at the end of the second quarter. Regarding cash, as Thomas noted, we ended the first quarter with $385 million of total capital, including cash and short and long-term investments. Because of the strategic actions we are taking, we now expect our cash spending to be approximately $150 million this year versus our previous guidance of $200 million. Factors that could drive cash spending higher or lower include the timing of truck sales in 2023 and 2024, as well as powertrain component purchases this year for deliveries in 2024. Actions that we are taking now to reduce cash burn will provide some relief from concerns about the weak stock market. Based on our current projections, we have no plans or need to raise additional capital in 2023 and into 2024. Finally, as a reminder, we are holding an Investor Day at our Austin headquarters on June 27th that we hope you can attend. Attendees will be able to participate in ride and drive events in both our HYPERTRUCKERX and Hypertruck KARNO that we showcased at the ACT Expo. We will also be exhibiting KARNO generator components and presentations from members of our Hyliion leadership team. Registration information for both the in-person event and webcast is available on our website. With that, I'll turn it back over to Thomas.
Thanks, John. At the ACT Expo, I was given the opportunity to give one of their keynote presentations where I shared 5 staggering stats around electrification. This presentation is on our YouTube channel, but I'll take a second and share the stats here with you as well. Stat 1 was that the battery packs on a BEV truck will need to be 330% larger than you'd expect when you take into account things like battery degradation, charge limits, driver behavior, and the weight of the vehicle. The second stat is the power consumption of plugging in 10 semi-trucks is equivalent to the same power draw as a Super Bowl stadium during game time. The third stat is that it's expected that the cost to deploy charging infrastructure will be about 1.5 times the upfront cost of the vehicles themselves. As an example, if you spend $10 million on trucks, then plan to spend about $15 million on charging infrastructure. The fourth stat is that over the past 50 years, we've only seen a 3% increase in the amount of grid electricity coming from renewables such as wind, solar, and hydro. And lastly, stat 5 is that it can take upwards of 10 years from start to finish to create a new natural gas power plant. As we stand here today, we are decommissioning power plants in the U.S. and slightly reducing our yearly national electricity production. I shared all these stats in an effort to showcase that BEV solutions are already behind the 8 ball in setting up the infrastructure needed for charging. This also ties into our plans to utilize the KARNO generator as a power source for stationary applications. Or, stated another way, there is a tremendous opportunity for Hyliion's technology in the future of electrification. To close out, we are excited to start the production stage of our HYPERTRUCKERX system next quarter. We are taking important steps to reduce spending and extend the runway that our strong balance sheet provides us today. And finally, we look forward to seeing many of you at our investor conference in Austin on June 27th. With that, we will now open the call up for questions.